Let's talk about investing for 2021. I'm going to cover the top 5 things you should know for this year.
Too many thoughts on my mind, I can't sleep at night, so I just keep writing.
Welcome everybody, I'm Zach, the Money Nutritionist, and it's my job to give you healthy money tips, especially going into 2021. So today I want to talk about the 5 things you really need to know for 2021 and the new year. Before we can talk about the top 5 things for 2021, we have to talk about where we are right now. And what has just happened is we just concluded the election of Joe Biden. We just had the Senate seats confirmed in Georgia to where now the Democrats have control of both the House and the Senate. So we've got the election out of the way. We also have the vaccines from both Moderna and Pfizer that have now been released. Not quite to the general public, but people are starting to get those vaccinations for COVID-19. In terms of stocks, the stock market is still at all-time highs. Technology stocks are the highest they've ever been. But on the other hand, cyclical stocks are down. And those are your things like clothes, your retailers, gas, things of that nature, vacationing, hotels, stuff like that. Those are actually down. Now that's the quick and dirty in where we are now. That's what happened near the end of 2020 up until this point in January. Now let's talk about what we can expect moving forward. So what you need to know going into 2021, especially when it comes to COVID-19 in the stock market, is that we have the vaccines. We know that big tech has been just crushing it in the stock market. We know that as the vaccines are accepted by more people, that we can slowly start getting back to normal. This could also imply a big change in pharmaceuticals because those vaccines went through extremely quickly. And if they're able to do it for those vaccines, who's to say they can't do it for other companies? Now, according to Morningstar, they did say that we can expect a very strong economic recovery going into 2021. And the reason for this is that they're very bullish when it comes to the vaccine. Just take a look at this chart. You'll notice on this chart that you can forecast a strong, long run of recovery, mainly because in 2020 there was a negative 5.1% drop in GDP. If you look at 2021, it's expected that GDP should be around 5.6%, and that's a massive turn. If you look at the red, those were the pre-COVID predictions. So if you just look at this chart, we could expect a very strong recovery in 2021. And if I had to predict, I'd say that would then flow over into 2022 because most likely a lot of those vaccines won't get to the public until later in the year. Now, when it does come to technology stocks, they've been crushing the broader market. Just take a look at this chart here. You'll notice that tech remains a strong outperformer in 2020. It has far outperformed the rest of the stock market all through 2020, including the drop. See, in 1997, Bill Clinton and Congress actually passed a global framework for technology growth. This framework ensured innovation could occur with minimal regulation and that innovators would be rewarded for their effort. This is a major contribution to the digital age, which saw the rise of smartphones, texting, apps, and it changed the way we work and communicate. And it changed the way we innovate. Let me show you how much so. If you look at the S&P 5, which consists of Amazon, Apple, Google, Microsoft, and Facebook, just those 5 stocks alone have absolutely crushed and outperformed everyone else. This was really easy for these companies because there were only a few massive digital incumbents who could control everything. And also, this is not the first time this has happened. Just take a look at this chart. Here's a list of the top companies over the last decades. You'll notice how IBM was at the top of the 1970s and 80s. Then they fell down in the 90s. Then came Microsoft in the 2000s. They've dropped 1 position over the last 2 decades. If you look at right now in 2020, all 5 of those companies are big tech companies. But if you look at every single decade before, there was no instance that all 5 were tech companies. You had General Motors for cars at one point, you had Walmart in retail at another point, you had communications at another point. So what happens is things are free and people love it, right? Because us as consumers, we love free Facebook, we love free searches through Google, but what happens is third-party companies actually suffer because how in the heck do you compete with that? So to combat this, the US Department of Justice starts coming after Google, they start going after Facebook, and you've seen this recently in the instance where Facebook's been threatened that they need to actually separate Instagram from their business. You've already seen Google's been getting sued throughout the European Union. So it's getting to a point where these companies are starting to be targeted As you saw under Trump, Amazon was being targeted. So if we just use history as our basis going into 2021, 2022 and on, if you're looking for investments over this next decade, what you need to take into consideration is that they always change. So when it does come to 2021, finally, here's exactly what you need to know. Sometime soon there's going to be a change. One of those changes will be that underappreciated stocks are definitely going to start picking up, and those that are highly overvalued are definitely going to start coming down in value. And every fundamental factor that you want to think of supports that thesis. It also supports the thesis that once the vaccine starts getting to more people, things will start to normalize. The Fed has said that they aren't supposed to raise rates until 2022, but they may tick up a little bit within 2021, or at least you need to prepare for them to start to rise again in 2022. What does this mean for you? This means you need to take advantage of assets that are good with low interest rates, and that would be something like real estate. Real estate has the lowest interest rates for mortgages right now than they've ever had, so when it comes to something like that, that's where you would want to put your focus. The third thing you need to know for 2021 is that it will start to get more expensive to capture market share. This is bad news for small companies because it will be more expensive for them to grab more customers. It also means that the larger companies can expect to experience lawsuits. Why? Because the markets are getting tougher on them, as I mentioned earlier. So the fourth thing you need to know for 2021 is probably the more difficult to predict. And what we do know is that America is built on capitalism, and we flourish when we have disruption, like disruptive technology and things like cryptocurrency, for example. It may be hard to see today, but companies like Amazon were able to find a new market niche or an unmet need, and that need was just being able to buy anything you want online and get it delivered to you, which was an amazing need that they found and met. So you have to ask yourself, what's the likelihood that Amazon will continue to be as strong as they are now 10 years down the line? Because when you're investing, remember, you're investing for a long period of time. We're not trading, so 2021 and 2022 are just a year apart. So you're not trying to predict 2022, you're trying to predict 2025 and 2030 for your investments in your retirement account. So ask yourself these questions. I do understand that Amazon's planning drones, that they are buying up their competitors, but if you look at history, what's the likelihood they're still going to be around? It is possible that Amazon will go from number 2 to number 1. They actually might be there now, I'm not completely sure. But with the rise of things like blockchain technology, AI, international companies, you never know what disruption could happen that could take Amazon or even Apple or Google off that list. And with all these lawsuits and people trying to attack these big companies that they're calling monopolies, you can see why they have less likelihood of actually succeeding over the next decade. And they probably will, they might, we don't know. Something like Tesla might break up into the top 5 if they keep performing the way they have. And that's how you want to think. It's very hard to predict, but get your thinking to match this concept of what's happening right now, what's the history show, and what could you think or foresee happening over the next decade. And last but not least, but international growth will bounce back. All the middle income families across the world are starting to see the most income growth of any other sector or class throughout the world. And that's your countries like Mexico, places in Africa, South America. Those countries, India is another one, where people are starting to receive more income, they will start to see explosive growth. In terms of China specifically, since that's the main one that Americans focus on, they're going to continue to be a force in the world. It's just something we have to deal with. They're going to continue to innovate. They're leading in AI. They're also focused on their own digital currency. So they're going to continue to be a force that we want to keep our eyes on. Not to mention that they're finishing up the new Silk Road and their partnerships with all these countries in Africa. But overall, that's not a bad thing for you. You can invest in China, you can invest in India, and you've got plenty of opportunity to make money out there. So overall, I'm extremely hopeful for the new year. I hope that one of these areas caught your attention and that you can take advantage of the opportunity that you're going to have in 2021. And that's all that I have for you today. Make sure to follow and subscribe, and I'll see you in the next video.